A bad loan document set can turn a good deal into an absolute nightmare. After funding loans since 2007, I can tell you that proper documentation prepared by a competent attorney is what separates lenders that actually collect on their loans compared to lenders who get stuck losing money. The difference between a clean repayment and a messy foreclosure often comes down to the paperwork that was signed months ago. I'm going to share my screen here with you in a second, and we're going to go through the exact doc set that we at Hard Money Bankers uses that our attorneys have prepared for us. And we've definitely modified them over time as we've, run into situations where we need to adjust. So let's see. So let me go through here. I'm going to dive into this here in a second, but obviously we always recommend getting a competent attorney to create and prepare all your loan docs. We've never done any loans without proper representation to make sure to consult proper legal professionals. Every state, jurisdiction, property transaction type, they're so widely different, and there's documents that are different on every occasion to protect your interests. So make sure you definitely get an attorney to be prepared. In some of these docs, like mortgages, deeds of trust, and assignments of rents and leases, they get put into public record, right? And if they're not done properly, you won't even be able to get them legally on record. So I can't stress enough to make sure you have an attorney that prepares all these for you. So this is what we're going to go through today. We're going to go through the doc set that we use internally at Hard Money Bankers, and we have lots of different doc sets because we lend in lots of different jurisdictions on a lot of different types of properties with a lot of different borrowing, different types of entities. So there's not like boilerplate doc sets. They're all different types of ones. So we'll go through that. We'll go through what our attorneys help us with and what they don't help us with related to title review document preparation. We're going to go through some of the supporting specific docs that we use sometimes in some of the files. And the most important thing that is in a loan doc set. And if you don't have this, good luck with any title claim. Like, you really, really need this particular thing, which is called a closing instructions letter. And I'm going to dive into that as well. So let me bring up this pen here so we can go through the loan documents that we use as private lenders inside Hard Money Bankers. And again, if I didn't introduce myself, I'm Jason at Hard Money Bankers. Been running Hard Money Bankers almost 20 years now with my business partner, Chris Haddon. So we've done over 4,000 loans, and I've seen a lot of good deals. I've seen a lot of bad deals, and I've seen a lot of deals that, because we had the right loan doc set in place, it definitely covered our butts. So let's go through what some of these are and the reason that they are so important. Because I think a lot of folks are like, oh yeah, you just put a regular, they just sign a loan doc set and it's good. It doesn't always work like that. So obviously the promissory note is the promise to pay. It outlines all the terms of the loan, what the rates are, what the fees are, what the repayment schedule is, what maybe there's prepayment penalties. Everything that outlines it goes in the note. Now, the note's not recorded. It doesn't typically get recorded on public record, but you do need the original, obviously, if you have to go foreclose on the property or the house when it's done. So the next is the mortgage or the deed of trust, depending on what state you are. Some states are mortgages, some states are deeds of trust. Out of the 7 states that we lend in, we use mortgage and or deed of trust in all of them. And it's the security instrument that documents, that in essence goes hand in hand with the promissory note, and it does get recorded with the county. So if anyone runs a public search after closing, they're going to be able to see this security instrument recorded in public records. That outlines everything. Okay. So after that, we have the personal guarantee. And the personal guarantee is obviously the borrower who is signing. They're guaranteeing the loan, and they're responsible for it personally, not just on a business level, but also on a personal level, where in essence, we can put a judgment against them if they don't fully repay the loan. So think about it like this. You do a loan to a business entity, and the business entity is owned by, let's just say, a spouse. They each own 50-50. The business entity would be the borrower. It would be the borrowing entity that is signing on the loan. And then the 2 members, let's say their husband and wife, 50-50 owners, they each sign personally. They both have a personal guarantee to be personally responsible for it. And the benefit of a personal guarantee is if a property goes sideways, and the borrower ends up potentially, losing money, they don't just walk away from this thing because they're also personally liable for it. We go after them, we can put judgment on it. We could potentially try to tie up other assets through the court system if we needed to do that. Now, 90% of our loans have personal guarantees. That's called recourse lending. Some of them don't. And really the only ones that don't, or if we lend to a self-directed IRA, that's an example of something that maybe does not have a personal guarantee because a self-directed IRA can't personally sign for it. So if you decide to do a loan without a personal guarantee, I'd probably recommend just lowering your exposure, lowering your LTV. So let's say you're comfortable doing 65% on a property, maybe just lower it to 50% LTV, have 50% more equity cushion. And be honest, that's probably better than having a guarantee anyways that you may or may not be able to collect on. So just something to think about in that. All right, so we talked about personal guarantee, assignments of rents and leases. This is another document that is recorded in land records and in public records. And in essence, if there is rental income that comes to this property, you can potentially go after that rental income, send a legal letter to the tenants and say the owner of the property is currently not paying. Please send your payments and transfer your payments directly to me. I'm not 100% if every state goes by this, but all the states that we've been in, we've been able to collect on that and it works out. And, the beauty of it is even if we don't collect on those payments, it does put pressure, knowing that we're going through the legal process with the borrower as well. So that's always helpful. Let me circle back on closing instructions because honestly, this is one of the most important things, but I'm going to circle back on that here in a second, just because that's something our attorney sends out separately with the doc package. So, LLC verification and authorizations and resolutions. In essence, it's verifying and claiming who are the members of the entity. So who's ever signing on the property, we obviously get driver's license. If we're doing a loan that has an LLC or a corporation, we're going to do a certificate, articles of organization or articles of incorporation, operating agreement or bylaws, certificate of good standing, and EIN or tax ID numbers for that. Those are the documents that we typically want to get from that entity. And obviously the operating agreement determines who is involved in the entity and who can sign, who cannot sign. Now, it's important to get some sort of corporate resolution on these files as well. And what the corporate resolution states is what they're stating today at closing is that they have the legal rights to be able to encumber this property, put a lien against this property, sign on the first mortgage of this property. And also, these are the members that are involved. Because there's always lots of operating agreements floating around. Maybe it's a business that's been involved in a long period of time. And you might think you have the most recent operating agreement, and hopefully you do. But this corporate resolution typically gives the borrower and the parties stating this is the most up-to-date entity docs, and these are the parties that are legally allowed to sign and be involved in that. So it's an important doc set that you need in that case. Let me think if there's anything else related to LLC docs. I don't think so. But yeah, just rule of thumb, anyone who's involved in the entity, we want them to sign. Now, there's sometimes there's managers of entities that aren't members. They just have authorization to sign. But all the members of the entity that have legal ownership equity, we want to sign. That's an important component. We want them to sign, and that this document independently authorizes this specific transaction. So that's important in this particular case. Let me talk about some supporting documents, and then we're going to talk about title review, verifying title companies, perform policies and markup stuff, and then we're going to also end with the process of what we do for pre-closing and post-closing, because I think that's important. So there's some additional documents that we do have in place depending on the situation. An example here would be like a bar affidavit for commercial purpose. So, we obviously want to make sure that these loans, we don't do owner occupied homeowner loans, we only do investor loans, commercial properties and business use, residential properties, so investment residential properties. So sometimes we have, bar affidavits for commercial purpose. I think that's important. We also have construction security agreement, which outlines the construction process and the draw process. If we're doing the construction component, I think a lot of these fix and flip deals have construction components. So you need a construction security agreement. Um, some of our doc sets have anti-money laundering declarations. We also have ACH authorizations. So we have to collect monthly payments. We can pull them automatically through ACH drafts. That's a big one. And there's just state specific and jurisdictional specific stuff that you need um, on each of these. And that's why, as a lender, like, it's not really responsible for you to be the one doing these legal doc sets. It's not really responsible for you to do on behalf of your own capital or other investors' capital. So just get a competent attorney that understands commercial loan doc sets to have them do that. There's lots of them all over the country. A lot of folks in the Mastermind group uses, some of the same attorneys to do so. You can always comment below this video if you need a recommendation or a referral. Happy to pass that over your way. So, sometimes there's some additional language in there, like, no power of attorneys. We don't like power of attorneys. Hey, let me talk about closing instructions, because some of that stuff will overlap here. So closing instructions is one of the most important documents. And what it does is it outlines everything that we require the title company to do. And we make the title company sign this. So it tells them all the docs that need to be signed, how they need to verify the members and, the signers. We obviously have commercial purpose language in there that the title company has to state as well, that yes, as far as they're concerned, this is a commercial purpose transaction. There's nothing that indicates that the borrower is using this for primary purposes. No secondary financing, no power of attorney. We try not to, have power of attorneys involved. It's a lot cleaner if the borrower is the one signing everything themselves. We've also been told that you can't have somebody else sign a personal guarantee on behalf of yourself through a power of attorney. So it's just best practice to have all the borrowers being it to sign there. We also try to avoid remote online notaries, which are like RONs. I don't know if you've heard that term before, but that's kind of been an industry term that came in since, COVID hit. But related to, the closing instructions, everything that we're requiring them, this is, in our title review process, this is everything we want on our policy. This is what you have to do with this. This is what you're responsible here. This is what you're responsible for here. So everything's outlined. It's usually like 3 or 4 pages, also has all of our fees. And the reason we document everything and have them sign it is if something gets messed up, usually what ends up happening is, if there's a title claim and we have to send something to the title company, we take that last page, we print that out. They have their original signature on it, and we send it to the title company or our attorney or the title insurer, if there's a title claim or something like that. So in a very, very important document. So let's talk about title review, because some of this stuff kind of overlaps with that closing instruction letter as well. The title review, there's 2 sides of the closing. There's the loan docs and then there's the title review. Both you need attorneys for. Typically it's the same attorney. Maybe it's not. Maybe it's somebody different. But remember, the title company doesn't represent you. The title company represents the title insurer first and foremost, and they're an intermediary of the transaction between the buyer, the seller, the lender, whoever else is involved, right? They're not representing you. So even if you're buying title insurance, they're not representing you. They're representing the title insurer. So you need to make sure you have the attorney that understands title review and a title commitment and title insurance to represent you. That's very, very important. Most private lenders or hard money lenders, well, first off, a lot of them do their own docs. And secondly, they're like, oh, I'll just, get the title company to do my docs, and I'll get the title company to send me the title policy. No, you need someone to protect you. If you've ever worked with us in the past and you've seen our, and done private coaching with us or come to our mastermind events, because our attorneys come to our mastermind events. So they go through the process and they go through horror stories, and they have much more detail of every little increment of these loan doc sets, but they'll say, like, look at the negotiation that we have back and forth on every file. We have a full email of like, hey, please remove this, please remove this, please remove this. We don't want this in our title policy. Please change this to this date to this. It is an ongoing negotiation that after doing 4,000 loans, I am not qualified to do. So that's why I recommend an attorney to do this. That's qualified, but just the purpose of this is to understand what title review is. So make sure your attorney is reviewing the title and you're getting the best. It's all negotiable. You can get the best policy that you want or that you need. And not every title company is going to agree to everything to prevent all risk, but you need to have the best title policy you can, because title claims happen. We're constantly in title claims. Things happen. Things don't get on record, or names were misspelled, or something happened where a prior loan popped out of nowhere. Like, things happen on that case. And, remember, besides an attorney helping with title review, you also want to verify that the title company that you're working with is a legit title company. There's a lot of fraud in title. So make sure to verify the title commitment with the title insurer directly. You can confirm just by calling the title company, the title insurer, and giving them the commitment number to make sure it's valid, and asking if the title company is in good standing. So let's say you're using Main Street Title and the title insurer is First American Title, which is a big title company called First American. Verify the commitment letter. Verify that the title company is in good standing. Stay with title companies that are the big ones that have been around a long time, that will actually pay off your claim if you have one. If it's a title company you never heard of, don't use them. The big ones are Chicago, Fidelity, First American, Old Republic. There's the big national ones that have been $1 billion companies that have been around for a long time that will pay that out. All right, so let me end with our process. Let me change my color right here, and let me just write process right here, because I think that's important. Like, our process. So we have our process pre-closing and our process post-closing. So our process pre-closing is after everything's in and we have everything. We send the whole loan doc set we send all our underwriting stuff to our attorney that's going to be doing loan docs. So we're sending them the ratified contract. We're sending them a loan info form with all the terms of our loan, so they know what it is, our LLC docs, and then borrowers, driver's licenses, and stuff like that. So they have all the documents. They have all the information, so they can supply the documents to the title company, and we have everything in place. So we start that up front, and then we don't approve wires to go out until we have a HUD one, until all the documents have been signed. And most importantly, like we talked about, the closing instruction letter is signed. After that's signed, then we can wire funds to the title company. So that's typically our pre-closing process. Our post-closing process is making sure all the documents, when everything's back, make sure everything is 100% signed. Make sure we have ACH forms filed in there, and the deal's ready to go. And then we put it right into our loan processing system, or our loan servicing system, and we're off to the races to collect monthly payments. But all this stuff has to be done right on the front end, because guess what happens? When a loan defaults, or there's a title insurance claim or something happens, you're going back in time and you're hoping that all that paperwork was done and signed correctly. And there's definitely, cursory errors that happen. People make mistakes, but you want to do whatever you can to make sure and check that things were done correctly. So these are the loan documents that we use as a private lender. This is the process that we follow as a private lender. Hope you enjoyed this video. Again, my name is Jason at Hard Money Bankers. If you need anything, just comment below this video, ask your question. Happy to help you out. Make sure you definitely consult an attorney that specializes in this particular field. So not just your regular attorney. Oh yeah, I can do a loan doc set for you. Like, this is an 80-page doc set, right? And it's changing all the time. We're constantly changing things as different things come up during contested foreclosures, or when different state-specific jurisdictional things change. So make sure you do that. If you need anything, reach out.